Hi, everyone, and welcome to this week's episode of Money Moves. Every Sunday, I talk about one news article, and this week's news article is the opinion that the stock market will go higher in the next few weeks. Then I will go over my investments, starting with worthy bonds. Next, I will talk about my taxable lending club account, as well as my IRA with Lending Club. And then I will go over my Fundrise account, as well as a project update for the New Jersey apartments that's part of my portfolio. Next will be my M1 Retire account, as well as my higher yield savings account. And lastly, for my investments, I will go over my active options positions. Then I will finish up with my week-to-week tracker. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like owning this 8-bed, 26-bath mansion in Sausa, Florida, or if you just want to be part of a well-educated financial community, definitely like and subscribe. It comes well-equipped with a stable for your vehicles, and a bowling alley, and a diner, because why not? It's currently on sale for $17.5 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. For reference, the S&P 500 was down almost 1% this week, and it was certainly pretty choppy. Moving on to the article, they say the number one change in the markets means higher stock prices over the weeks to come. They say the bull market is getting a new lease on life because of stock market timers. In recent trading sessions, timers have exited the market faster than they have in quite a while. And when they say timers, they mean people who are trying to time the market. They suggest that when market timers are extremely bearish, especially in the short term, that long-term investors should be bullish, and this is a good time to buy and hold. They say, based on the Halbert Stock Newsletter Sentiment Index, the average trader sits at about 30% involved in the market, while 70% of their portfolio sits in cash. I can definitely attest to this. I have reduced my active options positions in recent weeks, somewhat due to the drop, as well as just taking off profitable positions and waiting for the markets to show some better direction. The 30-70 ratio switched from just 3 weeks ago when it stood at 65.9% in the market and around 34% out of the market. They say this shift was caused by the recent sell-off, which may be scary, but it's definitely not comparable to the 34% plunge we felt in March. Traders have retreated from the bullish bandwagon even more strongly from NASDAQ stocks. NASDAQ exposure is only around 11% right now, which basically means traders are almost completely out of the market. This graph shows exactly what I mean. When just a few weeks ago, we were around 65% in the markets, now that percentage is sitting much lower, below even 30%. And this is due to that 7% sell-off in the S&Ps and an even larger sell-off in the NASDAQ. A contrarian analyst says that the hallmark to a market top is stubborn adherence to bullishness, and that's not what we're experiencing right now. That would suggest the fact that the market will go higher in the near future, and that an example of this is when we saw the dot-com bubble in the early 2000s. During that time, they hit a market top, and then they fell 13.2% over the next 6 trading sessions. And even though the market was falling, the Halbert Index rose 30 points during that drop. That is a stark contrast to what we're seeing today, when all of the day traders are exiting the market over a similar percentage drop in tech stocks specifically. As for me, I'm not quite sold on this theory. I think we will see market highs later in the year, but I think we might see some more short-term downward pressure or at a minimum sideways action. Moving on to my investments, worthy bonds continues to grow at the standard 5%, which means I made just over $10 this week. Having bonds in your portfolio is great in times of uncertainty, just like the stock market is showing right now. If you're interested in bonds that pay 5%, compound daily, are asset-backed, and are fully liquid, there is a link in the description that gets you 1 free bond when you fund your account. Moving on to my taxable lending club account, it did recover this week, up $28. And as I mentioned last week, that's because there were some notes that were in grace period that just needed to be processed. So some of those notes were paid, and only one of them moved into the 16 to 30 day late period, and one of those went into the 31 to 120 days late category. Looking at investments, I focused on all three categories this week in an effort to maintain my weighted average at 16.55%. Looking at term, I'm still sitting around that 75% 60-month loans, which is the goal for this portfolio. Overall, this account continues to do well at 10.4%. Moving on to my IRA, this account exploded this week, going up over $50 in 1 week, which is pretty unusual. I'm assuming that this is again due to the phenomenon I was mentioning last week, because there were 8 notes in grace period before, and now there's only 3. The 16 to 30 days late and the 31 to 120 days late periods stayed the same, so all 5 of those notes must have been paid. I focused mainly on A note loans this week, but I did take a few B note loans also. The weighted average is also coming down in this account, down to 16.89%, which is fine for right now. Looking at term, I did get closer to that 50-50 split that I want to have in this account, which I suspect will take around 2 to 3 months to get to. Overall, this account continues to do well, returning 35.4%. Moving on to my Fundrise account, it went up $9 this week, which seems to be the trend, right around $9 to $10 per week. And at the end of September, the dividends will be assessed and formally put into my account. And at that time, they will also reassess the value of the assets, which should increase the appreciation amount listed here. Moving on to the progress update for the New Jersey apartments. They say they invested $3.8 million in a 235-unit apartment in Hackensack, New Jersey, located 8 miles west of Manhattan. This is a typical new development in a built-up area, and as usual, the project had some delays due to permitting issues as well as the Rona. Despite various delays, they have made significant progress in the last few months, and they expect the structure to be complete shortly. And following that, they expect the first units to be available. They say the project was behind 9 to 12 months, and of course, they prefer projects to stay on schedule, but since this project is structured like debt, it doesn't matter as much to the investor. We receive a standard 10.3% annually on this project, regardless of duration. This project is also with Waypoint Residential, who has over $3 billion invested in apartments across 22,000 units nationwide. This structure is part of the East Coast REIT, and as I mentioned, it's structured like debt and pays out a flat 10.3% annually. Moving on to my M1 Retire account, I'm down just over 1.5%, and I only received 27 cents in dividends this week. Looking at the sectors, tech was down the most at almost 4%, closely followed by real estate at 3.34%. Moving on to my higher yield savings account, it was down 0.41%, much less than the market, which is good. And looking at the sectors that were down the most, realty income, which is real estate, was down 1.57%. And then some of these ETFs were down 1.77, 1.76, all a little bit more than the overall market. Moving on to my active options positions, I was up on the week. I know it says $1,000 here, but it was really only around $175 from the end of last week. But either way, being up on the week is great when the overall market was down. Looking at the active options positions, I did close that Yeti position for a profit. And then Ford here is in a profit as well. I may look to close that next week, but we'll see how it goes. This Amazon position is in a losing position right now. However, I still feel comfortable, and I haven't gotten close to this strike price quite yet. Next up, I have Yeti puts. Hasn't really moved much. It's up $1 right now, which is fine. Apple puts, I did roll these down because it was past my break-even point, and I'm not sure that Apple is going to recover here in the next month or so, so I'll definitely be keeping an eye on that. AMD calls. AMD was pushing downwards quite a bit, so I added a call position to protect the downside. Apple calls, I had these last week. They're in a profit right now. Facebook calls, I had to roll these down because Facebook was going down this week as well. And then Simon Property Group, I did roll this to the next expiration. The last one was at a profit of just over $300. So I rolled this to the next month to receive a bigger credit. Microsoft calls, they're in a profit right now, again, because tech is going down. Match calls, basically break even. Barrick Gold rallied this week, so that's in a profit. Uber calls, Uber rallied quite a bit, So this has been a little bit frustrating, but covered calls protect your downside, so you have to sacrifice a little bit of profit in order to protect the downside. Facebook puts down $100, AMD puts down $125, and Microsoft down almost $300. Again, these tech stocks were dropping pretty heavily, so these are all losing positions right now. CrowdStrike still in a profit, Carnival Cruise still in a profit, and then Match.com puts down $202. 3M, Snap, and Uber puts are all in a good position. And as you can see, Uber was up pretty significantly, almost to $37. Moving on to my Tastyworks account, I have Bank of America currently in a profit. Carnival Cruise, I did roll this position up, which is why it looks like a losing position right now, but I took profits on the last one and received a larger credit. And that's currently on the October 23rd expiration, so it's the furthest out option that I have right now. Ford stock is in a profit. FedEx is coming up to earnings, currently in a profit. Netflix, I had to put on a call credit spread in order to protect the downside a little bit. It looks like the volatility is dropping right now a little bit. As you can see, this is a pretty bad position on the put side, but I was able to receive a credit on the downside. So overall, I took a $5 credit on this position, and it seems to be stabilizing right around this price. Nike also coming up to earnings in 2 weeks, but I think we're going to rally into earnings. The Qs down a little bit. This is also an iron condor to protect the downside. You can see that call credit spread is already in a profit. Snapchat is also in a pretty strong profit, and I may look at rolling this up next week. SPY positions, I also have an iron condor on here. That call credit spread is providing most of the profits right now because, as I mentioned before, the S&Ps were down almost 1% on the week. Moving on to my week-to-week tracker, you can see my stock positions were down overall. Bonds continue to remain flat. My trading accounts bounced back just above where they were 2 weeks ago. My REITs were flat this week. Lending Club went up a little bit, and then my cash went down a little bit because I didn't get paid this week. Overall, you can see how each section is performing. Now, this is not exactly just market growth. I do move money around, which attributes to some of these changes. Like I put money into the trading accounts this week. Obviously, I spent money, so that went down. Bonds went down a little bit overall. And then my stocks went down almost on par with the rest of the market. Lending Club went up, and overall I was down 0.13%. Let me know down in the comment section what you think of my investments or my overall market philosophy. Definitely like and subscribe if you got any value out of this video. Of course, this is not financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. Today's jelly is another special from Ginger Billy and his view of what the male brain looks like.
Hello, Marco. Since the beginning of time, women have looked at men and they've asked themselves, I wonder what's going on inside his head. Now, as you can see here, this is the outside chores region and the inside chores region. The outside chores region is much larger. That is why men like to cut the grass. They like to rake and they like to weed eat. And the inside chores region is much smaller. That's why men are almost incapable of folding towels, washing dishes, and ironing clothes. Now, I know a lot of y'all is wondering, well, where's the sex region at in the male brain? Well, let me direct you down here to the second male brain, which is located down at the male's crotch. The second male brain controls the first male brain. See, this here is the message center. This area receives all messages from the second brain. And it don't matter what's going on up here in this brain. If this little brain here decides, hey, I want to have sex, it shoots a message up to the big brain. And all of this right here, this whole region, becomes the sex region.
Clearly, he makes some very strong points. Let me know down in the comment section if you agree with him. If you want to watch the full video,